everybody's going to read. So eyeballs are on this story, even if you love Trump or you hate Trump. It's kind of neither here nor there. So it's made this topic top of mind. And listen, I think that investors should have more choice. That's a good thing. There should be diligence. There should be wealth managers. You know, there are people that we look to in this industry, financial advisors, tax planners for advice. Absolutely. These products are complex. You know, this is not as simple, but a lot of Americans buy insurance products and there's complexity there. So you may need some advice, but I don't think we should withhold some of these good financial products that have and deliver on a goal.
Hello, everybody, and welcome back to the Truly Diversified Show. I am your host, Ben Mohr. We have a very interesting show today, kind of thinking outside the box here. You know, we talk a lot about life settlements as a alternative investment, something that we do here. And we brought people on here, CPAs. We've brought financial advisors who are in that space. But I want to bring somebody's outside perspective from it, but also somebody who really does believe in the alt industry, somebody well known in the alt industry. I wanted to give you people, everybody, listeners, just an overall perspective that this isn't just a few people out there who are just in the life settlement space saying, the stock market isn't the end all be all to everything. There's a lot of people out there who are working on that side of the street, who are showing people other ways to make money. One of them that everyone talks about are hedge funds, and so I thought, why not bring on a hedge fund expert, somebody who knows what's going on there. For those of you who have hedge funds, this will be an interesting talk. And for those who have just heard the term and have thought about, should I get into this? This is the person you should be talking to. It's Kim Flynn. She is the president of XA Investments. Kim, thank you so much for joining us. We appreciate you having, coming on the show today.
Thanks, Ben. Happy to talk about hedge funds and anything alternative. Absolutely.
Okay. So, here is a basic question for some people at home. They think they know what a hedge fund is. If you could give me your 20-second speech to the kind of hedge funds for dummies, what are they? Who qualifies? And because I think a lot of people think, oh, I just don't have the money. And they probably don't realize that it's different than it was 20 years ago. It was so exclusive back then, but a lot of average investors could definitely get in these days. And why don't you just explain to people, what is a hedge fund? And number two, a follow-up question is, why should just your average, an accredited investor who might have $1 million, $2 million, why should they be considering hedge funds?
Absolutely. So a hedge fund, there's various strategies that hedge funds use. There's equity-focused hedge funds. There's credit-focused hedge funds. Oftentimes what they're trying to do is deliver more return with less risk. So the goal is twofold, right? It's not enough just to deliver the return of the S&P 500. Hopefully there's some sort of additional return that you gain from investing in a hedge fund. And then there's also the goal of muting volatility or reducing risk, right? The U.S. investor is highly allocated, over-allocated to U.S. public equities, many of us in technology stocks, which are highly volatile. So hedge funds is just one way to diversify an investment portfolio. And the recent performance of hedge funds in the last 3 years, I think, has brought a lot of institutional investors and now individual investors back looking at, what can a hedge fund do for my retirement account or for, my long-term savings. So this is just one area of the alternative investment arena. You talk about life settlements. There's a lot of interesting private market capabilities, things like people want access to private equity, people want access to venture capital. Some people want access to infrastructure, thinking about inflation and what inflation has done to our returns. So there's this whole spectrum of alternative investments, and hedge funds are kind of on the left side because most of the portfolio contents are liquid securities, either public equities. So an example of a hedge fund would be like a long short equity hedge fund where they're shorting individual stocks that they're bearish on. or maybe they're using a derivative to provide some sort of hedge to the downside. But ultimately, the exposures that they're taking, it's not just a long only stock portfolio that you might find in a mutual fund or an ETF. So, and it's typically managed by a boutique or hedge fund manager that's been historically running money for institutions, pension funds, endowments. And you did have to be able to meet the investment minimums to go into a private fund to get that kind of exposure. And Ben, what we talked about, what's changed is the SEC, the Trump administration, they're trying to make a wide spectrum of alternatives, including private equity and things that are even much more illiquid than a hedge fund, available now for Americans in retirement accounts.
Right. And you and I talked, when we first met, that's kind of how we met, had our little bond there was, we talked about how the new news, explained that to people. I mean, I had it on a episode earlier, but I want to refresh it that, that new news that came out probably a few weeks ago about the 401k market, because realistically, for those at home, just to review, if you had a 401k or a 403b, these are either company-sponsored retirement plans, and they're so cookie cutter. It's like it's either your Schwab or Fidelity or one of the big names. And guess what? Here's kind of this little menu you have. You can maybe get some stocks, mainly mutual funds, and that's what you're beholden to. And you can't do anything. If you're working at, say, XYZ company, you might be there 20, 30 years. And this is all, I mean, like the TSP, the thrift savings plan is terrible. I mean, they literally have like 4 options. Now with the Trump administration, and you and I, we're not about politics here. We're about money, right? So it doesn't matter who's in office. If they make a move that's good, it's good. And this is a move that we believe is good. Of course, the market says, oh my God, this is a terrible idea because average Joe investor is just not, sophisticated enough to be into hedge funds, and that could be a risk to them. But the ruling was that they're trying to allow the average investor now to be able to take parts of their 401k and move into a place where you are or invest with us. So talk a little bit about that as a game changer for not only where you're at, but for the people who might have an opportunity to invest with you.
Yeah, the news coming out in late August was around the executive order that Trump signed, allowing, directing the SEC to open up access to private equity specifically and cryptocurrency. So there's a lot of enthusiasm, among crypto investors, but you can't put crypto directly into a mutual fund or exchange traded fund. Now, there have been ETFs launched with crypto exposure, but it's all derivative based. It's not holding Bitcoin directly. So I think there's a lot of enthusiasm from both private equity fund sponsors. Blackstone has been lobbying for years to try to get the Department of Labor and the SEC to do more to make these less liquid assets available. You would argue that if you're saving for retirement, you've got typically a long-term investment horizon. What better to, in terms of time horizon, private equity, you need to have a long time horizon. So there's a good fit there for retirees. And I think some of the negative sort of criticism of the executive order was, should we allow people access to private equity or crypto? Well, any individual can go and set up a wallet and buy crypto, right? And I think we like investors to have choice. And you're right, most 401k plans, the choice are limited and suboptimal. And so if we can open up the private markets for investors, we've talked about hedge funds, and that's just one part of the market that most individual investors don't have access to these sophisticated, time-tested managers. We want there to be a degree of quality, and the market's going to sort that out in terms of the performance of these funds. So more to come here. I think it's going to take the industry, the 401k plan, the 401k, I think, is celebrating its 50th year, its 50th anniversary this year, but it was built on a mutual fund chassis. So the industry is going to have to spend and invest in technology to have it be such that we can incorporate things that are not in a mutual fund. It could be in a hedge fund format, private fund, or an interval fund, which is another type of registered fund, but it's not going to work in a mutual fund.
Stop gambling your retirement future on the stock market. I've helped many investors just like you make millions of dollars with double-digit returns without placing one single penny in the stock market. Look, this is a proven strategy that ultra-wealthy, savvy investors like Warren Buffett have used for decades to hedge against stock market risk. So if you're interested in learning how to make competitive returns without stock market risk in an investment that is not affected by politics, worldwide events, or economic woes, all you have to do is simply click on this link below to learn more. And we were discussing this, and that's why we're on both on the alternative side here. Don't you think? I mean, and the other show I talked about is just all the pushback, the negativity that you're hearing, that you see. If you type in this executive order, there's a lot of press about just this could be so risky for investors, and it's definitely written from frame mind that it seems like to me that almost like a press agent for the stock markets writing these, right?
Well, I think yes, because both the positive and the negative, everybody's going to read. So eyeballs are on this story, even if you love Trump or you hate Trump. It's kind of neither here nor there. So it's made this topic top of mind. And listen, I think that investors should have more choice. That's a good thing. There should be diligence. There should be wealth managers. There are people that we look to in this industry, financial advisors, tax planners, for advice. Absolutely. These products are complex. This is not as simple, but a lot of Americans buy insurance products, and there's complexity there. So you may need some advice, but I don't think we should withhold some of these good financial products that have and deliver on a goal. I think any uncertainty that people have right now is these products, in our research that we do, about half the market has less than a 3-year track record. So the skeptics, I think, will probably wait for more track record to develop.
Right. And so that's, I think, definitely the wave of the future, is that being involved in alternative investments, don't you think, will just become more mainstream over time? Of course, there's going to be things that people invest in that aren't going to work out, but that's just like in the market, right? And so those things will get weeded out, and the stuff that is, our company has been around for about a decade and we have a track record, so we can sit there and show people. I'm sure you're the same, that you've got, some depth of history to show people. So it's like the ones that aren't going to stick around are the ones, it's just like that. It's like you have your blue chip stocks, you have stocks that come along, or ETFs or mutual funds that don't do so well. And if they don't work out well, they're usually not around very long, right? Or, people don't invest in them, right? And so there's no difference there. It's like the proof is in the performance.
It is. I mean, there's also a matter of sort of expectations. These types of private market assets are going to behave differently. I mean, that's why you're buying them in the first place. But many of the funds have limited liquidity. If you're investing in infrastructure or private equity, the time horizon for that investment is 10 to 15 years. And so most of these structures provide limited liquidity, but it's, I think we live in a world today where everything is so fast paced that there's sort of an expectation, and you have to adjust that expectation that you're not going to have dollars today or, at a moment's notice. This is for the private market investments that you're making are for a different part of the portfolio. And if you want to achieve those long-term goals, you do have to take part of that portfolio, diversify it into something that's not going to be highly correlated with the U.S. equity market.
Right. I think that's where you and I are on the same page, is that a lot of people, like, let's say, I know, this annuity guys, or, your standard insurance guy will be like, oh, you've got X amount of dollars in your retirement account. You need to take it all out because the market, this guy is falling. And I think you and I both, that's just massive insult to anyone's intelligence, that the market is a place where you need to put a decent amount of your money, because when it does well, it does well. But then it has those years where it kind of takes a downslide. And this is why the name of the show, be truly diversified, true diversification, is that you need to have a portion of what you have in the alternative space so that it works for you when the market isn't working. Right?
Yes, and I think 2022 taught us that lesson. Neither stocks nor bonds worked, and a lot of people were beside themselves because they had, things they needed to spend the money on that month or that year. And so, I think that is why the danger of a very successful U.S. equity market is that people, they become over allocated to the thing that's working. And you do need to be conscious of what part of my portfolio is delivering on what goal. Growth can clearly be a goal, but a lot of the investors that we work with in the private credit space are income focused. And if you're approaching retirement or you're in retirement, that income generation goal is really top of mind. And so you need a greater portion of your portfolio invested in things like private credit, real estate debt, even infrastructure kicks off yield. So your goals will change. And, it worries me when people become too concentrated in one part of the market.
Well, before we go, tell us a little bit about XA Investments. Tell us about yourself. Go ahead and throw out where people can reach you and what it is that you guys, specifically focus on, so that people know what it is exactly you do. Look, you and I are a part of the club, being Truly Diversified. We do life settlements over here. Folks, if that's something that doesn't interest you, Kim's got some opportunities. And so let people know where they can reach you and what it is that you guys kind of focus on.
Sure. We help asset managers take what they do for institutional clients and bring that to the private wealth part of the market. We do research exclusively on interval funds, which is the way that these hedge funds and private equity strategies, come to market. So you can go to our website, xainvestments.com, for some of the research and white papers that we have if you want to learn more, or you can follow me on LinkedIn. We do post daily observations, just educational insights about the growth of this part of the market.
Okay. And again, that is Kim Flynn, and that's xainvestments.com. Just want to say it again, that's where they can see you. And it's Kimberly Flynn or Kim Flynn on LinkedIn. And we'll have all that in your bio on the show. But Kim, I want to thank you so much for joining us today. We'll definitely have you back on just anytime. Next time the market takes a big drop, you and I can come on here and discuss and have the warning sign, folks. This is why you need to start looking at things. But I really appreciate you coming on the show. And hopefully we'll talk to you soon, okay?
Thanks, Ben.
Thanks, Kim. Appreciate it. Okay.